My name is Rohan Kapoor, and this is Aiden Hussain. We are the co-founders of the Global Economics and Finance Club. Today, we are going to discuss. Our club members here are analyzing the stock market right now. But they will join us shortly. As you can see, I'm doing some analysis myself, but let's get into it.
Alright guys, so big day today, right? At 8 a.m. we had a major economic report come out today. PCE, you know what does that stand for? Personal Consumer Expenditures. So what does that mean exactly, okay? So personal consumer expenditures is basically, how spending going on in the economy, you know, how many, personal spending, you know, in the U.S. economy, okay? So today, that came out at 8 a.m., right? And it was better than expected. So what does this mean, better than expected? That means that the overall report was higher. So that means more people are spending, right?
Right, because the market gives its own forecast for what a percent will
be. So that's good for the economy because more spending is what drives the economy. And so that was good, right? So this week this month, I would say, has been very interesting, right? We've had a lot of drama going on. Banks collapsing, okay? We had Silicon Valley, we had some other...
Yeah, there was some other banks.
Some other banks,
I've heard
right?
the name.
You know, and just fear sparking in the US, right? So there was a lot of drama that went on, and from what the higher-ups claim, everything is under control, everything is okay. Whether it is or not, I don't know. But, so, Silicon Valley collapsed, how many days ago? A while ago.
2 weeks ago.
And
that's what prompted Jerome Powell to talk about.
So Jerome Powell in the interest meeting minutes, talked a little about this. A lot of the reporters had questions, and he came out and said that everything's under control. Everything's going to be going good.
Under control.
Under control.
That's what they said.
Okay. So, as these fears in banks, started, it brought a lot of, bad markets.
Sentiment, bad market sentiment, But this is surprising though, because the PCE was good, which means that maybe the bad sentiment is like not needed.
Yeah, but people, the fear has started to come down a little bit because the government has said that they are prepared to bail out the banks, because a lot of people have a lot of banks are people have people's money, right? Money, right? So when these banks collapse, there's people
who left with their money
that have over millions of dollars in banks, right?
Right.
And so the issue with Silicon Valley is the government said that they would only, give $250,000
up to $250K,
to the people that the bank owed money.
But Silicon Valley specialized in.
Silicon Valley specializes in a lot of they hold a lot of people's money, or a lot of the companies' money, that's millions of dollars, a lot of businesses and stuff. So, that's not that good. But at the same time, they did say everything is under control, and they will be, bailing out people's money. So, the past couple of days, we've seen a lot of the market has been going up.
It's been rallying. It's been going up a lot.
Originally, it was going up one day, down one day, up one day, down one day, but now it's kind of
right.
Going up, right? It's interesting.
It actually broke 400, which is a big thing.
Yeah, so.
Because we've been down below in the 390s, 380s for the longest time, and the fact that they could just break 400 without a big catalyst, solely because of good sentiment, good sentiment that shouldn't be there, is surprising. It is interesting. That just shows you again how manipulative it is.
It's really affecting the overall macro structure of indexes such as the S&P 500. And I'm interested to see where this goes. Will more banks collapse? We don't know. Who knows? We'll see, right?
Can you tell us a little bit about the technical analysis for today, March 30th?
So today, right? Okay, so if we look in the past, first let's look at the Monday, okay?
So this shows us the graph of the S&P 500 on the 1 day, meaning today being the rightmost, and around last year being this leftmost, and it shows you how much it's fallen, how much it's going up, stuff like that.
Yeah. So if we look on the 1 day, so if we look at the past year or two, I would say, right, the market has been an overall selling channel, a downtrend, right? Some could call it a recession. But what's interesting is this past couple months, from this kind of
November to now range, it's kind of been like consolidating a little bit. The macro structure overall seems to be changing, right? We did see this higher. Oh, what happened here? Sorry, we did see this higher high, and by looking at this trend, we thought it would go down, but it actually came up here.
Yeah, it came up. It broke up.
And it made a higher high, which is very interesting. So, will the market on an uptrend now? Who knows, right? Is the overall macro structure changing? It does seem like something interesting is going on. So I'm really excited to see what's gonna happen.
Now let's look at the on the 1 minute.
Okay, look at the 1 minute.
So how do we explain what's happening in the 1 minute? So see this big jump right here? What was that caused by? We were just talking about.
So the PCE report came out as good, like I talked about, which is good for the market.
Very good for the market.
And that came out at 8 a.m. right? So the market hadn't opened yet. So when the market opened, upon good news, in the pre-market, the pre-market was up a lot because of the good PCE report.
Right.
And so
we'll talk a bit more about pre-market and futures later.
When the market opened, the price actually jumped.
Now, as you can see, the PCE was good, right? But it wasn't super duper amazingly good. It was less than expected. I mean, it was more than expected, right? So it didn't rise and keep rising, right? Because at a certain point, investors, if you're an investor and you put yourself in their shoes, right? You want it to go up. You have confidence that it will go up at some point, right? But at the same time, when you hit these major resistances, or when you hit these these high levels, 406, 405, people start to worry that that people will sell, right? Because if you're an investor and you invest down here, right? Because all investors are going to be buying up right here, right? Because they know that the value is going to go up. But once it starts consolidating and people start selling, it's a chain reaction. Because then you want to make it so that you profit, right? So if you invest down here and it goes up because of good PCE, right? The question is, do you hold or do you sell and take your profits already? Or do you risk it going down more? You already have money secured based on the PCE, but do you want to hold or do you want to sell? And that's why it didn't we don't see a bunch of white bars here. That's why we've been consolidating. Market's been deciding, making up its mind. That's how a lot of the movements work, actually. So as you can see, it is sort of an uptrend. It's pretty choppy right now. It's pretty shaky with every other wick / candle / minute being a black or white, black, white. No true patterns have emerged yet. We're making very high highs. We haven't seen this level of 407 in months, I think. It's been a while. But yeah, that should be it. We're expecting this.
A little bit more. Okay, yeah. So, one other thing we're gonna touch on. So we talked a bit about the banks, right? We did have the Federal Reserve's interest decision meeting a week ago over spring break, and they came out and said we're only raising them by 0.25%.
0.25 BPS.
So, although they are still raising them, it could say that is good because in the past we've been raising interest rates by 0.5%. So relatively, this is a little bit better.
Relatively,
right?
it's good.
So, but at the same time, in the meeting, a lot of people had questions, and it was concluded that the Fed does not plan on cutting interest rates
this year,
which is bad.
That's a big thing.
Yeah. So because people were anticipating that by now the Fed should be starting to cut interest rates, right?
Yeah.
That's not happening, and they have talked about this goal they have, which is what is it, the 2%?
2%.
They have this goal of reaching a 2% interest rate, right?
The last Fed meeting, they said that they were very confident that the market would go down to 2% inflation and the economy would stabilize very soon, right? That was the words he used, very soon. He didn't say when. Now, in this latest Fed meeting, he's talking about how they could reach it in a matter of few years. So people started to get confused. And that's why, even though it was a 0.25% BPS increase rate hike last time, which is good, you could say, relatively, the market went down. And that's what we care about. How do catalysts influence the market?
Yeah, so we are I think 5.1% was the number we're at, right?
5%-ish, yeah.
So clearly we're not really that close to 2%. So
long way to go.
yeah, so if Jerome Powell is right, then we should not expect interest rate cuts for a while. So that is actually not a good sign for the market, right? Because we expected to kind of reach our goal of 2% in People expect we should be cutting rates by now, but really 0.25% is still better than 0.5%. But people, a whole year without cutting, right? It's not, what people wanted, right? So, this should be bad for the market. But I mean, the market's going up, so.
I think that. Anything else to say? That's about it. Yes, you can. Yes, you can. Yes, you can.
Do you guys notice that the Federal Reserve is not a government association, but it's a private,
it was
private
made.
association? Do you know that fact?
Yeah, it was created by
Multiple banks.
multiple banks.
It's just
Who's
like
created by?
a union created
I
of
know.
multiple banks. So, if the chair of the Federal Reserve say, "Hey, we're gonna be aggressive, guys, be careful," they're gonna be more interest in the future. We're gonna listen it the opposite way. Why? Because they do so. They say something for their own benefit.
For their own benefit,
For
right?
their own benefit. So, I mean, if they say, for example, the interest rate will gain in the future, so people will sell their stocks.
Yeah.
So they as a bank or an investment bank, they can buy the share. However,
That's how
like,
manipulation.
They say the interest gonna gain in the future, but they do not gain the interest. That means like they hold the stocks, but the stocks skyrocket in the future.
That's a really good point. Aiden, can you hear me for a second? All right, so basically, I wanted to talk about this one concept in the market called manipulation. Give us a second. Okay. So basically, let's analyze this second, right? This happens all the time, every day, every second. Okay. The way the market moves is by this thing called liquidity. People buying and selling their assets and their shares, right? So let's take a look at a perfect example, right? Let's say, in fact, this is a perfect example on the one day we just showed you, right? Let's say this is the graph of the S&P,
Yeah.
right? On the 1 minute, on the 5 minute, for example, right? Let's say in a given day you have it going like this, right? A downward pattern, right? See downward pattern, and you might expect it to go even down, even more, then even more. Now, most likely, what's going to happen is the reason why this occurred was because of some catalyst, right? So you expect it to go down even more and even more. That's not always the case though, because the market is never guaranteed to go a certain way. A lot of times what happens is in this given time frame, right? What happens is, even though you have, this is called a selling channel, even if you have a selling channel, what it'll do is it'll break out, right? It'll suddenly, it'll break its pattern and move up for any amount of time, 20 minutes, 30 minutes, right? Why? People were so negative sentiment, followed by a sudden positive sentiment. And it's not like this is a big level either, right? If it was 400 and people were scared that going below 400 would cause a lot of money to be lost in the market, I understand. But this is not even that important. Like, what if it's just like, what if it's mainly like 384.6, some random level, right? Why would it go up? Manipulation. This happens all the time. What happens is, you have to look at the market in terms of people. These are all people buying and selling their shares, right? This is manipulation. This is manipulation. Manipulation, right? What? This is just, this big move is when some organization, like a hedge fund or a bank or a firm, it buys a lot of shares. It buys a lot of shares in the stock, forcing the stock, pushing it up. It spends its millions of dollars in that one moment, or not one moment, in those few minutes. In that hour, millions of dollars, which compared to like the only thousands of dollars that are moving the market right now, right? The candle wick from before, maybe they're like small, right? But suddenly you have a big white candle, right? This pushes the market up. Know first and then act.
So is that all we have?
I think that's all we have.
That's all we have for today. Thank you for attending our global economics meeting. And yeah, stay safe out there.